Let's bring in right away, forget the data check, let's bring in Chris Rupkey, Bank of Tokyo-Mitsubishi. He's dying to sit down with Brent, 117.05, up 1.1%. 2 months in a row, small business, just to be polite, isn't there. Give me some optimism. You're good at that. Give me some optimism out of small business.
I can't be optimistic. No, I mean, well, we did get the payroll jobs report, 268,000 private
3
jobs.
months,
They do survey,
days,
40% of the firms are firms of 20 or less in terms of employees.
Did not know that.
I think there's a bit of a disconnect here between what people think, what they say is happening, and what is actually happening. I mean, don't forget, many recoveries from recession, people say jobs are hard to get after months and months and months of big 200,000
critical distinction. I'm glad you bring this up. A survey's different than data, isn't it?
Yeah, but I mean, I did see the headline on the Bloomberg earlier about this number, and it's not a great finding. And it's similar to what happened with the non-manufacturing ISM last week. The same sort of data, and that data also looked like a bit of a soft patch for growth here. But then Friday, you got the huge jobs report. So what do you believe? The actual data? Well,
no, go ahead. I don't mean to cut you off.
I'm a little bit worried about
this. It's not like radio. We don't have to go to traffic and weather.
This so-called anecdotal evidence, the survey material, may be signaling a slowdown past the end of April here. So we really want to see, reports a month from now. I know later in the week we get April retail sales, but it's going to be a while before we get hard data.
Here's Bill Dunkelberg's work here at NFIB. Bring it in here, folks. Dunkelberg studies small biz inflation. And you can see, Chris, down here on the chart, the move up. It's been an abrupt move up in surveyed prices for the NFIB. Are you seeing the beginning of that filtering in? The place I ate last night, everything on the menu went up $1. Everything.
Yeah, I guess, well, food away from home is going up quite a bit, but the core prices still are not moving up, and that's what the Fed is watching. I don't know for how long. I mean, I'm thinking this Friday we'll see core bump up a little bit more. It's 1.2% now year to year. Maybe it goes to 1.3 or 1.4% this Friday for the month of April. So we'll see.
Where does the sweat factor come in there? Is it 2%?
I think they are going to be concerned once it starts moving in the direction of 2.0. Right. That'll be their concern. It's the directional movement, the trend.
Here's another chart. This was the worst chart in the NFIB. I don't mean to be glib. Look at that tie I'm wearing. That's from Lila Fox. Conditions here. What a drop down. I'm going to suggest that's a one-off month. But when you fold the NFIB credit conditions into the Federal Reserve studies of credit conditions, how are our credit conditions?
Well, that's a tricky thing. It's always difficult for smaller firms without substantial assets to get credit, always. Ironically, while the small businesses are kind of a warning signal for the economy, commercial and industrial bank loans, they're booming right now. They're up about $50 billion from the low. I don't know. It's usually used for working capital. There's some M&A going on now. I mean, we've made the turn in commercial and industrial loans, and I'm always struck by what New York Fed President Dudley said, that if we see this turn in loans, maybe the Fed's going to have to step up and start normalizing rates. So,
what is your call on that? Hotsius is out. You and I are going to be both in the grave when the Goldman Sachs call or when they raise rates. What's the Bank of Tokyo-Mitsubishi call?
Well, unfortunately or fortunately, it's still there in September. It's a little abrupt. They didn't drop their low rates promise for an extended period in June. It's making that timeline look difficult, but we got pretty big job gains here. I mean, all we need is inflation to swing up a little, and they're going to be seen as being behind the curve.
Warren Buffett quote. Here it is. Thanks to Douglas Cass for this. There it is. We see something close to stability at these much reduced home prices. That was 2 years ago. And everybody, I'm allowed to be wrong, and so is Mr. Buffett. And then let's bring up the note of the day after we ponder what, is it the Oracle of Omaha? What he said. Here's the note of the day. And there it is. Seabreeze Partners Management, the housing market drowning in debt. Doug Cass notes the Buffett quote. Thank you, Doug, for that. And he calls for a further 5% decline. I would avoid any housing-related equities, many of which have had their share rises in extra. How call in the last 3 months?
Not at all. I mean, I noticed that I think our view is that home prices are going to bounce along the bottom here. I mean, they're only down 3% year over year. They could bounce plus or minus 3% for another 2 years, and then they'll start to pick up. There's usually a period where home prices have to come down, catch up to people's incomes.
Right.
I think it's like a 5, 6, 7 year period, and we're getting close to the end of that. Probably by the end of 2012, I think we'll start to see a gentle lift in home prices.
Interesting. Earlier this morning, folks, on Bloomberg Surveillance, I spoke with Gov't of Bank of Tokyo Merrill Lynch, and we discussed service sector inflation.
Well, service sector inflation remains quite weak. And that's where 60% of headline inflation actually comes from, Tom. And the service sector, frankly, is much more sensitive to the pickup in the labor market. It's hard to see how you can get any pickup in service sector inflation with wage growth so weak.
Gov't there, you've done great work on this, just parsing inflation. And what I'm hearing interview after interview is even if we have this inflation now, it's going to be disinflation or low inflation later on.
Well, just going back to his comment, the analyst's comment, this happens every single time. Average hourly earnings, wages are very low, and yet the Fed raises rates anyway. It's usually wages follow inflation, not the other way around.
Housing, a further price decline?
Maybe it could be down at the end of the year 5%. Certainly not my neighborhood in New Jersey. No, prices are stable there. They're not falling.
Good. Okay, Chris Rupkey, thank you so much with the Bank of Tokyo-Mitsubishi. Let's look at the number here, folks. We're Skype. I use Skype.